so beautiful, so elegant, just looking like a wow. Just looking like a wow. Just looking like a wow. So beautiful.
Hello everyone, welcome you all to the Achievers Adda. I hope audio video clear. Kindly confirm in the chat box once. So first hit a like button guys if you like the session. Any music appeared? Any music came from the video? So the final battle JRF marathon for the UGC NET Commerce. Our December Commerce exam is going to happen on 7th of December 2023 in the morning shift. Commerce is going to happen. Now, this 100% short topics on a unit-wise basis I will be going. These short topics are derived from the previous year questions of June and December and October and previous years. So which are most repetitive in nature, that topics I am going to explain extensively. You have to bear with me in each and every topic, because if you are taking light in every topic that is already known to you, there is a point of questioning an unknown question or unknown point from known concern. So that is what our intention is to cover from the examination perspective, which are going to appear most probable questions from this topic from all the units. Right? I hope everything is fine and good to go. So I'll be starting from unit 10 only. The reverse approach I'll be doing it. So let's go ahead. This marathon, do hit a like button, and those who have not downloaded our Achievers Adda Learning app for the free session and the PDF download purpose, or for the upcoming UGC NET exam courses, you can download our app from the Google Play Store or the link given in the description. And guys, UGC NET Paper 1 Capsule Course 399 courses going on for the December 2023. In this previous year questions of 35 shifts with a detailed explanation it is covered. Those PDFs as well as quick single liner PDFs and CBT mode, almost 11 mock tests are available to you at just $399. You can download the app and purchase this one. And we have also launched UGC NET Commerce CBT test series just at a 99 rupees only. 5 mock tests are available. If you are interested, then you can buy. With explanation, the tests are going to be there. Right. So let's go ahead towards the topic. Topic number 1. Right. Number 1 topic. First, there is so much confusion in the previous year questions of 3 exams. This topic is given in the recent June exam, June 2023, December 2022 also question, and October 2022 also there is a question from this topic. What is the topic? The topic name that you know very well. It is belong to income tax, agricultural income. Agricultural income. Right? Some confusing statements are there in the agricultural income, first of all. And this agricultural income, I will make full clarity with a minute point on the questioning area, which are agree, which are not agree. Give me 5 minutes. Just concentrate on the slide, concentrate on the explanation for a 5 minutes. I will give you full clarity of, you can able to identify any type of question from the agriculture income, that to 2 marks in your pocket in 5 minutes. Right? So first of all, what is agri income, sir? What is agri income? So this is belong to income tax, unit number 10 chapter. First of all, section related to, in income tax section number 10, subsection 1, related to exemption of agriculture income. This is exemption of agriculture income, sir. Right? But where agriculture income definition has been defined. Section number 2, subsection 1A has defined the agriculture income definition. Definition of agriculture income. This is the first point. Right? This is the first point. And in this, if you look at what is agriculture income as per the section number 2, subsection A, 1A. So if you look at agriculture is an income, if it is derived from the land which is situated in India. If it is from other assets, it is not agri income. Land situated in India, outside India is not agri income, and that Indian land should be used for the agricultural purpose only. Means for the cultivation purpose, or with the cultivation subsequent process need to be used. If the land is being used for any other purpose other than the agriculture purpose, then that is not an agri income. So land must be there, situated in India, it must be agriculture purpose only, then only it is exempted from the tax under section 10 subsection 1. Clear? Number 2. Then if you look at agriculture income, some more purified definition. Here, rental revenue derived from the land is an agriculture income. You given the land for a rental purpose to cultivate others. So that is an agriculture income. And you are doing agriculture operation, that is a cultivation process. And cultivation of the land, you are only by yourself, you are cultivating the land and growing the crops. And income from the process means you are engaged in the process of cultivation plus packing, which is suitable for the market. So you are only doing cultivation, you are only making a further process, you are only making a packing and all, and making available for the sale in the market. Means you are making your products which is cultivated by you, and you are making them fit for the market. So that is what? Subsequent process. Operation plus subsequent process. Both. And income derived from the sale of produce. Whatever that you produced as a cultivation process, the grass or whatever that you produce, you will be selling, and from that you are generating agriculture income. That is also agri income. Right? That is also agri income. Next, further more purified to get more clarity. Look at sir. Here they mentioned about the process, right? Here they mentioned about the process. But which type of process? There are two processes which are involved in the agri income. Basic operations are there. Basic operations are there. Subsequent operation. In the basic operation, if you look at digging, sowing the seeds, etc., is a basic operation of agriculture or the cultivation, which is tilling of the land, sowing of the seeds, or the planting, irrigation, where we are application of a human skill and the labor upon the land before going for actual cultivation. What that point is also agriculture income only, activity only. Which is an agriculture activity? This is basic one. Subsequent means which fosters the growth of and preserve the produce. In subsequent operation, you are doing everything. You are making a pesticides for that, or you are giving a water supply, everything that you are doing, and whatever you produced out of the agricultural activity, you are preserving them, means storing them. You only produce, you are storing them in a warehouse. And for rendering the produce fit for the sale in market, you are making that product, whatever that you produce, so you are making or converting them to a marketable product, which is fit for the sale in the market, which are performed after the produce sprouts from the land. Performed after the produce sprouts from the land. This is also part of, because after doing subsequent operation only this outcome is coming. Digging the soil around the growths, removal of undesirable undergrowths, weeding, tending, pruning, cutting, harvesting, all are agriculture operation. So this all put together agriculture operation. Right? Basic operation alone, if they are doing agriculture income, exempted. If they are doing only the subsequent operations, Suppose assume that they are doing only the subsequent operation. They have not produced any agricultural crops, but they are directly buying from someone agricultural produce and packaging, making fit for the market. Is it agricultural income or not? Is it agricultural income or not? He is not produced. He didn't produce the agriculture product. He is only purchased from the market and making them ready for the market. Only subsequent operation is doing. Only subsequent operation is doing. Is it agricultural produce? Is it agricultural activity? No, sir. Only whenever subsequent activity alone they are doing. Subsequent operation only they are doing. Income is not at all exempted. This is taxable 100% because that is not agricultural income. Only subsequent operation is not agricultural income. Basic plus subsequent operation put together is agricultural income. So basic plus subsequent will be an agricultural income. So you got the clarity now, full. You can able to identify the question right now. See? So finally, the conclusion for this is easily basic operations alone, agri activity. Only subsequent operation, not agri activity. Subsequent plus basic is the agri activity. Right? For your convenience purpose, if you look at the instances of agri income, growing trade and commercial product like a jute, cotton, agro income, and growing of the flowers, plants sold in a pots are agro income, provided the basic operation. Remuneration and interest paid to a partner. Any remuneration, salary or a commission received by a partner from a firm who is engaged in agriculture operation. Yes, that is also agri income. Because they are engaged in agriculture income, from that only they are generating income. Interest and capital received by a partner firm engaged in agriculture operation, that is also agri income. Because the firm is engaged in agriculture. Right? Income arising by sale of trees grown and denuded parts of the forest after replanting, and compensation received from the insurance company for damage caused by hailstorm. So for the agricultural damage only they received a compensation. That is also agri income. Any fee derived from the land used for grazing of a cattle and being used for the agricultural operation, that is also agri income. Right? All these are the examples, are the instances of agricultural income. Right? Done. So now there is no confusion should happen. They are clearly giving these type of statements only in the exam. You should be in a position to identify. Right. Now in the recent exam, 3 shifts is having one another way they asked this question again related to agricultural income only. How to identify a tax or how to calculate the tax when agricultural income is included in the total income. So this way, step number 1. First we should identify income from non-agri income. Non-agri income and agri income we should identify. Suppose 10 lakh non-agri income, 3 lakh agri income. First we have to add together. Then calculate the tax on this total 13 lakhs. Right, total 13 lakhs, total income, and tax on this total income. Suppose we got it as in 2 lakh 20. Agri plus non-agri income, the step number 1. Add. Tax on that both is in step number 2. After calculating the tax, then in the third step now, we have to take only the agricultural income plus basic exemption limit which is available. Now it is 2 lakh 50, assume. Basic exemption limit which is available plus agri income in the third step. We have to calculate the tax on agri income plus basic exemption limit. So on this you need to apply the tax. So here you applied on agri plus non-agri income. Here agri plus basic exemption. So difference between this both. Step number 2. Whatever the tax that you calculated in step number 2, step number 3 tax, difference between both the tax. So 220 minus 30 will be 190. After that, net tax payable is 190. Then for this, you need to add the health and education cess is 4% now. That will give you the full clarity. That's it. Okay. This is the steps they are asking. Those who have not solved the PYQs now, absolutely they will not be interested in listening to the session. I'm not even caring about them. Those who solved the previous year question, recent exams, they know the value of this. And the previous year question also. The previous agriculture income and this question value, they know about it. In 3 shifts, so in 2 shifts and December 2 shifts also. Clear? Partial integration not required, sir. This is a partial integration concept only. This is actually a partial integration. The scheme itself is called as a partial integration, the process. But there is a 5,000 limit and all of the steps are important. Steps are important. Most important steps are. Right, first topic done, sir. Next, second topic, topic number 2. 2 marks in your pocket. All topic is there here, advanced tax. Advanced tax. So when the advanced tax is applicable? Advanced tax is applicable if their total income exceeds 10,000 or the tax which we calculated on total income exceeds 10,000. In which situation? Number 1 or number 2? Bolo, sir. Whenever your tax exceeds 10,000 rupees, then you are under obligation to pay advance tax. When your total tax liability as per section 208, every person whose estimated liability for the year, liability of what? Estimated tax liability, not the total income, sir. Estimated tax more than the 10,000 or equal to 10,000, then you are required to pay the advance tax. Suppose if a person is more than 60 years, which is a senior citizen, will he be required to pay the advance tax, sir? Whether advance tax is applicable to him? Please tell. If he is a senior citizen, you can see those who are excluded from paying advance tax are senior citizen who are above the age of 60, not having any business or profession, they are not required to pay advance tax. No need to pay advance tax, right? So what is the due date? On or before 15th June, 15% of advance tax. 15th September, 45% minus 15% that you already paid. 15th December, 75% minus 45 already paid. And on or before 15th March, 100% of advance tax. But one thing is to be noted here in this advance tax provision. What is that? Section number 208. Section number 209 also how to calculate the advance tax. Now, there is a one more point. For a presumptive income people, for a presumptive income assessees, for a presumptive income assessees, for a presumptive income assessees, advance tax is when? 31st March. Or else 15th April, I think 31st March only. 31st March will be the due date. 100% they need to pay. For a presumptive income, 100% at a time they need to pay. No installment allowed for them. Right? So there is a one more thing. I will just So let's look at the economics one point, because the full tax is also not suggestible. Let's look at one economics. So this is memory based concept only. Theory of profit, theory of business firm. What is this? Theory of business firm, theory of profit. Match the following, they're asking a many question. They're asking a question from match the following, sir. That is theory of profit. Risk bearing theory of profit given by F.B. Havlik. Uncertainty bearing theory, Frank H. Knight. And dynamic theory of profit, J.B. Clark. As well as innovation theory of profit, Joseph A. Chumpeter. Trend theory of profit, F.A. Walker. So 5 theories are there. 5 theories. 1, 2, 3, 4, 5. Right? So respective profit theories and right side list 2 they'll give you to match. Match the following they can ask. That way they can ask the question. Theories of business firm. Hypothesis sale revenue maximization. Baumol model, which is given by Baumol. Hypothesis of maximization of firm growth rate, which is given by Maris. Hypothesis of maximization of managerial utility function, given by Williamson. Everybody try to type it in the chat box so that it will be easy for you to remember. Satisfying theory, Simons. Hypothesis satisfying behavior, Seart March. Hypothesis of long run survival and market share goals, which is Rothless Child. So these are the business firm theories and theory of profit. They can ask the question in match the following: list 1, list 2, or else list 1, list 2. Either way they can ask. Recent exam question is that sales revenue maximization. This one related to this one. Which of the following theories related to business firm? So they have given mix of both the theories and asking a business firm theory. Right? Do hit a like button if you like the session. Next, sir. There is a Information Technology Amendment 2023. Are you ready? Information Technology Amendment. Information Technology Amendment. Yes, 2 marks done. Every topic carries weightage in the exam, sir. Those who take light now, it is up to you. Might have studied, but you never know the examination point. Yes. So what are Information Technology Amendment Act 2023? Theoretical questions are top notch in UGC NET recent exams. Problematic questions are just we can count on fingers. Maximum accounting and business finance. Practical questions they are not even touching. Practical questions also they are converting into theoretical form. That's a thing which is going on at this present recent trend of exam. First of all, as per the Information Technology Act 2023, obligatory for the intermediaries means the platform who are publishing the content via internet. So no platform can allow harmful or unapproved online games like a Blue Whale or the PUBG, harmful games which are not allowed to post it, or they should not have the games. And they should not share false information about the Indian government. If you are sharing any false information about the Indian government, first you should have a facts checking unit. There is the introduction of new term in that act is that facts checking unit. What is that unit? Fact checking unit. Fact. So fact checking unit is there. In this, whether that is really true or not, you should confirm before publishing in your internet platform. Like an online intermediary, including social media platform like a Facebook, YouTube, Twitter, all the social media platform, and service providers like Airtel, Jio, Vodafone should make reasonable efforts to not to host that type of content which is related to the central government, fake or misleading. If you are hosting, you are also liable as an intermediary, and that posted person also liable as a company. Together, they are going to be liable. right? Together they are going to be learning. And there is another amendment which is introduced in the recent is that self-regulatory bodies. Here, platforms who are providing online game to register with a self-regulatory body that will determine the whether that game is permissible or not permissible. Under the Information Technology Act, only self-regulatory body will be there. You have to go and register before publishing that game in your platform. The platform should ensure that online games do not involve any gambling, betting elements. They should also be comply with the legal requirements. So whatever the legal rules, if you are going for a gambling and betting, so that has to be complied with. And this is a recent examination point, losing safety harbor. Losing safety harbor. If any piece of information is marked as a fake by upcoming fact check unit, if this fact check unit is identifying that some information is fake or misleading one, then they have to remove that content, remove that post. If you are failing to remove now, you have to be penally liable, and litigation against the third party also it will be protected. You are penally liable. Social media sites will have to take down such posts. Internet service provider will have to block URLs. So if anybody is posting like that now, the URL will be blocked by the respective information technology authorities. Next. Happen. Wait, sir. 1 second. Maybe it was stuck. आ गया. Competition Act Amendment, sir. 2023 Competition Act Amendment is also there. Most interesting question is asked in 2023 June already from this new law. So there is no chance of taking light. Right? Highlights of Competition Act 2023. Same statement copy pasted in the exam, sir. Recent exam. Shift 1, I think. 2023 June. So in the Competition Amendment Act 2023, what are the things that are there? One of the most significant change introduced is that a new deal value threshold has been introduced. Like if any transaction involves, which is acquiring a company or merging with other company or any transaction is going to happen, which is more than the 2000 crores rupees. How much value is? If they are going to meet or exceed 2000 crore rupees, if they are going to meet or exceeding 2000 crore rupees, they have to take the approval with a sustainable business operation. Then they have to take the approval of Competition Commission of India. So when the merger or acquisition or the amalgamation, anything is going to happen which exceeds a transaction value of more than 2 crore, they have to take the approval of CCI. Please type it in the chat box. Second one, the threshold, whatever they stated now, it is actually expanded the scope of CCI to much extent, very specifically. Right? And here, concept of material influence has been introduced. What is this material influence? Generally control. Previously the definition called as an control. Now the same control is redefined as a material influence in Act. Recent amendment. The change acknowledges that having ability to exert significant influence over the management affairs and strategic commercial decisions of any entity is a key factor in determining the control. So here, material influence is nothing but you are having, as a company, you are having a substantial portion in the other company business decision. That is what material influence means. You are having that much high influence is going to be there. Not just a control, you are having high influence on their decision. so which is termed as a material influence. Will provide a clear guidelines on what control actually the meaning and what material influence. Influence means you are forcing, you are involving in a decision. Control means you are having a control with respect to voting power or the security or the investment. But influence means you are trying to dominate their decision making, and whatever you wanted to do, you are trying to make them to do. Right? And fourth amendment in the 2023 law. Timeline for implementation. Timeline for implementation. So that is, the amendment has also reduced the timeline for implementation of combination to 10 days previously. Now it is just only 150. Amendment has also reduced the timeline for implementation of a combination. Means any merger or the amalgamation, if once they have approved with the CC and all the process completed, for the introduction or implementation purpose, 210 days they usually take. But now it is 150 days only to implement. Right? And here, limitation period. The Amendment Act also introduced 3-year limitation period. 3-year limitation period also introduced. So if any type of violation of the Act or allegation, alleged violations of the Act or contraventions of the Act is done by that merger or a combination or acquisition companies, then within 3 years their acquisition amalgamation can be cancelled by Competition Commission. Right? The limitation period imparts certainty and finality with respect to competition law enforcement, and if they are violating this law specifically, it will be taken back, their approval will be taken back and clear time frame is given to them. Next, third amendment, sir. Third amendment. Looks like so much theory, but important, sir. Don't take chance. Because these are not concentrated by regular people who are giving the exam. These are concentrated by who are preparing thoroughly for the exam. So whatever others are doing, if you do, nothing will get extra. Whatever others are not concentrating, which are going to appear in the exam, you have to do that extra, which will fetch your JRF. Right? Super profit should be there, not normal profit. Normal profit, so everyone will get, that is net. We want a super profit, now that is comes only with a goodwill. That goodwill is this extra points. Next, hub and spoke cartel. This actually increases the scope of anti-competitive agreement to catch entities that facilitate a cartelization. Cartelization means grouping. Forming a favored group is called as a cartelization. Right? So it is mainly introduced to stop the cartelization process or cartel process. Expansion of scope of entities. So any entity who are entering into competitive agreement now, anti-competitive agreement, so their expansion is going to be increased much. Who are going to enter with a competitive agreement now, no problem, but anti-competitive is dangerous. Next, framework for settlement and commitment is also introduced. One more thing here, I think there is a leniency plus concept here. Leniency plus, it allows the commission gives an additional waiver of the penalty applicant who discloses existence of another cartel. So actually, you caught by the Cartel and Competition Commission of India, you formed a favored group like that, they catch you. So what Competition Commission of India says, if you identify any other person who is running the cartels or favored groups to create a competitive agreements, stop their competitor and kick out the competitor from the market, inform us, we will reduce your penalty. Inform us, we will reduce your penalty. So that we can catch more number of thieves easily. That is what? Provision of leniency plus. Right? Is it clear? In Companies Act, how many schedules are there, sir?
So beautiful, so elegant, just looking like a wow. Just looking like a wow. Just looking like a
7 schedules are there, right? Total, how many schedules are there? 7 schedules are there. Schedule 1, 2, 3, 4, 5, 6, 7. Recent June exam question. They have given the schedules on left side and right side they asked us to match. So schedule number 1 is related to Memorandum of Association and Articles of Association. Alright, number 2 is related to depreciation, section number 123. Schedule 3 is related to balance sheet. We know, so as per the schedule 3 only part 1, part 2 of the balance sheet and profit and loss account will be there. Section 129. Part 4, code for the independent directors. Schedule 4. Schedule 5 is appointment of MD and whole time director as well as the manager also. Right? And here schedule number 6 is infrastructure project. Section number 55 and section number 186. Schedule number 7 is related to corporate social responsibility. Section number 135 most. Ads were there, kya? Just looking like a wow. No, madam. By looking at the topic, we are taking 2 marks. Just looking like a wow. That is why that wow movement is coming. It is like a cricket match. Whenever helicopter shot is there, wow movement come now. Right, next. Total 7 sections. Now, let's go back to the tax ones. So recently there was a question on perquisites of a motor car. They asked us to calculate the perquisites of motor car. Right? So perquisite of a motor car. What is perquisite? First, perquisite you need to understand, sir. What is perquisite? Perquisite is nothing but a kind benefit given by the employer to employee. Kind benefit like a laptop, car facility was given. Kind benefit by the employer to employee. Right? Generally in income tax, when the car is owned and expenses met by wholly official use or not. Suppose car is owned or hired by the employer. Employer is the owner or else employee hired it. Expenses also met by the employer. Both are by the employer. Then wholly for official use. Wholly for official use. Here star mark is given. Read the star mark. Provided that employer maintains the complete details of such journey and expenditure, gives a certificate of expenditure. So that means he is giving details about everything. Right? Then when both are being provided by the employer, that will become a perquisite. Perquisite. But the perquisite benefit is being taken by the employee now. How much exemptions are allowed and how much is going to be taxable? Look at carefully. Schedule page is somewhere, sir. I need to go after this one. I will show you. Okay. Right. CC and perquisite value. CC means capacity of the engine, car engine. The car engine is up to 1.6 liters. That is small car. If it is a large one, above the 1.6 liter. June 2023 question, 1.8 liter. So that is high capacity. Low capacity perquisite value, whatever that you provide expenses. Now generally as per income tax, the kind benefit given to employee is taken as a, if it is small car, 1800 per month will be taken as a perquisite value into 12. 1800 into 12. And if it is large car above 1.6 cc, 2400 per month will be taken into 12 months. How many months they are holding? So for everything, for this also, if they are also providing a driver, which means a chauffeur. If chauffeur is also provided, 900 extra to be added. So 1800 plus 900 into 12 it will become value. If it is small car. If the chopper also provided to this 2400 plus 900 into 12 total. Like that we have to calculate driver amount also. Driver amount it is total 900 it is coming. So this is both by the employer. And here employee hired or owned. The car is belong to employee and employer is bearing the expenses. Then actual amount incurred by the employer as reduced by the perquisite. So whatever the employer incurring expenditure that will be reduced because that expenses are bare and vehicle is related to the employee. Here in such case now when employee car is when employee car and employer is bearing the expenses, then whatever employee expenses are bare now from this employer expenses will be reduced. Whatever you calculate from that employer expenses will be reduced. That's it, right? And if it is owned by the employer, employee is bearing the expenses. In such case, 1.6 liters, 600 per month is the value of perquisite. Above 1.6, 900 per month. And again, you can add driver 900 plus 900. You can add the driver. That's it. That's it. Nothing more, nothing less. Simply only remember, if the car is owned by the employer and employer, this rules will be applicable. If the car is not owned by the employer, now employee is the owner, but employer is bearing the expenditure. Actual expenditure, how much incurred, that will be taken. But whatever paid by the expenses of the employer will be reduced from that actual expenditure. That will be treated as an perquisite. Understood? Clear? Huh? This is more purified one. Somebody asked about the schedule, right? Go back and check now, sir. Here it is. Done. Session is going good. Everything is fine. No difficulty. Then please share with your friends. There is no difficulty and session is good. Right. Let's go back. Now, one more question, damn sure question which they are asking is that income tax relief, sir. Double taxation avoidance agreement is there. So, double taxation avoidance agreement, most important, you can see. I'll explain a simple concept. What is double taxation avoidance agreement? So, generally the tax at an international level, when the person is having a foreign income also, suppose the cricketers, Virat Kohli is playing outside India also. When he plays in South Africa, he need to pay the tax to the South Africa also for earning a income in the South Africa. And as that is based on the source rule. Now, as per the resident rule of tax, he need to pay to the India also income tax. Right? When both the countries are taxing on the same income, then it will be a very difficult for the assessee. Na? For a same income, that country is charging, this country is charging. Then leftover amount will be, his hard work will be too low. Too low income will be there. So that is why to curb that practice, there is a double taxation avoidance agreement relief will be given. So double taxation avoidance agreement will be there. But we call that in short form double taxation avoidance agreement, DTAA. Hence, in this there are two types of release. As it is in June shift to one question is there, that is this. Shift to this. Shift to same in single shift only. This question is there also. Transfer pricing question also. So in single shift, 4 marks in single concept. Understand the intents of it. You go and check. In the recent June paper only, they have asked 2 questions from this area. Two questions from this area. Now, to provide a relief to them who are paying a taxes in 2 countries, there are 2 types of relief we have. Section 1990A related to bilateral. Bi means 2 countries. 2 countries are mutually agreed and thus they sat together in a meeting to discuss and to provide the relief to these people who are having a foreign income in each of the country, mutual countries. So they have a mutually agreed double taxation avoidance agreement is there with them. Mutually agreed double taxation avoidance agreement. Both the countries are properly agreed. When there is no mutual agreement like that, our Indian government itself has to provide some type of relief to that type assessee who are incurring 2 taxes on 1 income. So that is unilateral, only one-sided benefit. Where there is no double taxation exists, we will go for this one. Suppose. In bilateral, the question is in bilateral, where both the countries are going to provide a relief. So when the bilateral will be applicable, when the 2 countries are agreed to provide the relief to the assessee who are having double taxation. So with respect to double taxation, the relief will be there, and with respect to exchange of information, with the exchange of information of a persons who are evading the tax in their countries and who are avoiding the tax also. And for recovery of income tax also, we can enter into this type of agreement. 3 purposes will be there. 3 purposes will be there. And there are 2 methods of relief here. One is exemption method, sir. Second one is a tax credit method. Exemption method means one country will exempt the tax for that assessee. One country will levy the tax. Generally, resident country will exempt and source country will levy the tax. Right? Will collect the tax. Resident country will exempt the tax. Source country will collect and levy the tax. That is exempted method, exemption method. Whereas tax credit method is tax will be paid by that Virat Kohli in South Africa as well as in India. Later, after coming back to India, after submitting a proper proof of evidence that he went to South Africa and gained this much income, paid the tax to Indian government and South Africa government. After submission of that proof, Indian government will be giving a credit. Indian government will be giving a credit for what? Whatever the tax that we paid in South Africa, that amount will be credited to Virat Kohli. So tax resident country will give the credit for the tax paid in source country. So in such case, he is finally paying tax only in one country, that is in India. Here India is following exemption method, tax credit method is like this. Understood or clear or any doubt? Now I am going back to the second one, which is unilateral relief, sir. The steps of unilateral relief is been asked in the recent exam. In which of the following cases the unilateral relief will be applicable where there is no double taxation avoidance agreement? Right? In which cases the double taxation avoidance agreement is not there? Then how the process of unilateral relief as per section 91? Number 1, unilateral means only one country will be providing a benefit where there is no agreement with that country. First condition 1, if there is no agreement between government of India and government of a country from which income has been gained, right? Government of India unilaterally will provide some relief to residents under section 91. Number 1, assessee is a resident of India during the previous year. Assessee is a resident of India during the previous year. First condition, the same 4 steps they asked. He must be a resident of India during the previous year. Number 2 condition, sir. He must be deriving certain income from other country. So Virat Kohli is the resident of India. Virat Kohli derived income from South Africa. Yes. And the tax have been paid or deducted in the country from such income. In South Africa, he might have paid a tax. He must have paid a tax. In South Africa, he is also, the government also deducted TDS. Either TDS deducted or he himself paid a tax to South Africa. Fourth condition is that there should not be any double taxation avoidance agreement between India and that country. Now in our example, it is South Africa. If these four conditions are satisfied, then unilateral relief will be given. Clear? If these four conditions are satisfied, then unilateral relief will be given to them. Oh, so how to calculate the relief under 91? You can see. First, compute the net taxable income, both foreign income, Indian income, you calculate it. Next, find out the amount of tax. How much amount of tax has been can be paid as per the Indian rules? How much tax can be paid? Calculate that Indian tax. So whatever the tax rate which is paid in South Africa, that means other country, that average rate of tax need to identify. Average rate of tax, how to identify? Here gross tax payable as per this. How much tax payable in step number 2 divided by net taxable income. That is step number 2 divided by 1 will give you average rate of tax. So this rate and the rate at which South Africa has been levied a tax. So our rate and other country rate will be calculated. Whichever is lower rate of tax will be providing a relief. So double tax the income here which is there now, which is foreign income into rate but that we found in either lower of this or that we need to identify. So then based on that we'll be getting a unilateral relief amount. Second area of questioning in the double taxation or else international taxation. First area of questioning bilateral unilateral relief. Section number 90, 90A for bilateral, 91 is for unilateral, single. 91, 1 is for one is for uni. Right? Now there is a concept called as an transfer pricing concept. This question is asked in June 2023, shift number 2. Last question is this only before the passages. And December 2022 also shift number 2 they asked. And shift number 3 in case of October 2022. In 3 shifts, 3 exams in last year, the question is there with respect to it. Very basic question. You know what? I'll explain that question after. Because this is where here only it is written clearly. This is the question which is asked. Transfer pricing deals with section number 92. Right? So, when a company is having presence in multiple countries, those are called as multinational companies. So generally the tax they don't want to pay much when they are multinational company. Suppose Amazon is a multinational company. In India for Amazon they are charging 30% tax. But in US they are charging only 20% tax for a company. Assume. Now Amazon company wants to transfer the profits which are generating in India to USA or not? Obviously, because they can reduce 10% tax. They slowly transfer certain profits to other country. They can reduce 10%. Every SSC wants to pay lower rate of tax. Why we want to pay higher rate? When we are having a chance by creating some fictitious or fake transaction, they'll try to shift that income to USD. So that to curb that practice, to stop that process by the multinational companies to take advantage of a lower trade tax and transferring the income, multinational groups would normally transfer their taxable profit earned in India to some other country where tax rate is low. Right? To stop that practice, the transfer pricing evasion practices, anti-evasion practice has been introduced. So transfer pricing section 92 It is having three definitions. 92B, what is international transaction? 92A, what is associate? How they are associated enterprises? One, Amazon India and Amazon Global. How they are associated enterprises. Their relationship we need to identify in the 92. Arm length price. At what price this entity has agreed? And what is the regular price in the market? What is actually the agreed value between these two? So like that we need to identify. This is a question in June exam. Sorry, December exam. This is a question where lower rate is available. That is June exam question. Right? Now, arm length price. This is October 2022. One of the question also. Arm length is asked in December as well as. Please bring a mic nearer. Why? It is clearly audible, madam. Is it, sir? Problem is coming like that. Oh no, from where the voice is not clear, it is. I can hear very clearly. It is. Break in between. Maybe your network issue, that means. Chalo. Arm length price. What is arm length price? Arm length price is the price transaction between the two related entities. Related entities are nothing but associated enterprises as per the 92A definition. Is the price that would be paid if the transaction had taken place between the two comparable independent. Suppose if someone is my very close relative, like if my GF is coming, I am running my business. My girlfriend is coming, I will select, take free only, free, for you, free. If our friend is coming, I pay 100 rupees only for you. Okay. But if some other person, customer is coming, no sir, 10,000 is fixed. We can't reduce that amount at all. Correct now? So, for a girlfriend, for a friend who are associated entities, you are reducing the price. Then, due to that, there is a, if it is those girlfriend and boyfriend are two companies of two different countries under the same entity, close relation, you are reducing the price and you are transferring profit certainly from one to another. So, to curb that practice, arm length price will be there. Arm length price is the price as if the price which you sold it to independent customers. That is called as an arm length. If you go or if I go, that will be the same price. That price they will bring it up into the transfer pricing concept to curb that practice. So for that calculation purpose, the principles are given in the OECD model, which is Organization for Economic Cooperation and Development. Transfer pricing guidelines are given. Section 92 has cup method, resale price method, cost plus price method, profit split method, transaction net margin method. The question was asked this: which of the following is not a arm length pricing method as per the transfer pricing guidelines? That is not a method is given. Today morning only we solved it, right? Arjuna batch people. Done, sir. Absolutely. Now transfer pricing, all concepts completed. What is each method not required for us? Yes, that is here final level concept. Now let's go back to some new, some other concepts other than the tax. Because tax is dominating today. Every day one will be dominating, sir. So don't worry about it. Now minor income, recent questions are there. Minor income. ratification will be there or not, like that. Please do hit a like button. You like the session. If you don't like the session,
So
you can hit a
beautiful,
dislike button.
so elegant, just looking like a wow. Just looking like a wow. Just looking like a wow.
मजा आ रहा है सर. यस, अता भाई. तो सब रिवीजन हो रहा है ना. चलो, minor. What is the status of minor in the Indian Contract Act 1872? Look at. Suppose who is a minor as per the Indian Majority Act 1875 who have not completed 18 years. The minor below the 18 years. Steady fellow. Right? So condition when the age of majority is 21. You can see any agreement when you enter with a minor for the liability purpose, it is void ab initio. Correct na? Since the beginning it is void. Void ab initio for if minor is not going to get a benefit na. Void ab initio. Any agreement or contract entered for the benefit of the minor, valid. For the liability of the minor, void ab initio. Right? So when a guardian of a minor person has been appointed under the guardians, where the superintendent or the caretaking of a minority property, minor's property is assumed by the court of wards, then those persons can be claiming against that minor. Now, main point is that no ratification is the point. Agreement entered at the time of minor can be ratified after attaining a majority. That is the question in 2023. Agreement entered with a minor during the minority can be ratified after attaining a majority. No ratification at all. Okay. An agreement with a minor is completely void. It cannot ratify an agreement even attaining the majority because a void ab initio agreement cannot become valid later. Cannot be ratified. But if on becoming a major, minor makes a new promise, I take the responsibility now. I am taking a new fresh type of contract. Then in such case, it will be legally binding because he is making fresh everything. Right? He is making fresh everything. Now, a minor who lacks a capacity, actually minor under section 11, he is incompetent to enter into the contract for the liability. He is competent only when he is getting a benefit. So, disqualified by law and mentally incapable person. Right? So, now finally, he cannot ratify after attaining majority unless he makes a fresh agreement. Now, we know that this is from the Bachpan we are studying, but recent exam, June 2023, given so much badla. Wrong answer given for this question, you know. They stated, promise is an agreement. Simply. How come promise is an agreement, sir? Here, promise and agreement both are same. They stated in the statement one, they given that as a correct answer. But actually, wrong answer given by them. Even after challenge, also they have not changed it, unfortunately. But generally, offer first 2A offer. We are giving our willingness. We are telling the willingness to do something. We are offering. I wanted to sell my car. Offer given. 2A acceptance. Okay, I also want your car. I will buy your car. Acceptance given. Offer plus acceptance will become agreement. Offer plus acceptance will become actually a promise. Right? Offer plus acceptance will become a promise. Proposal is given, accepted, it will become a promise. When it is properly, two persons are in the like-minded with a consideration. Now, when a promise with a consideration, it will become an agreement. Sir. When a promise added by the consideration, it will become an agreement. right? Then agreement plus enforceability of law will give you the contract like this. Generally, proposal or the offer plus acceptance is a promise, right? Promise plus consideration will give you agreement. Agreement, when it is enforceable by law, then it will become a contract. Clear? Then it will become a contract. When agreement enforceable by law, it will become a contract. Fine? Chalo. Next concept. As per the, this is also June 2023 question. As per the Negotiable Instrument Act, what are the general features or the characteristics of negotiable instrument? Negotiable instrument means negotiation to other, means transferring to other. That's what negotiation. So essential elements are, number one, it necessarily or must be in writing, sir. It must be in writing, the instrument, either a bill of exchange or a promissory note or a check must be in writing, right? And it should be properly signed. It should be properly signed, right? And freely transferable. Based on this question is there. Freely transferable from one person to another person unlimited number of times. And holder's title is free from all defects. This we call it as an holder in due course. Holder title, whatever, once he get into holder now, so we think that it is free from all the defects. There is no defects in this instrument. It can be transferred any number, unlimited time till the payment. Every negotiable instrument must contain unconditional promise or unconditional undertaking or order to pay the money, or must consist of money only. Money and money only. Other than should not be there. So it must unconditional undertaking or unconditional order will be there. Unconditional undertaking for promissory note. Unconditional order will be for bill of exchange. And some payable should be certain. Amount must be specified very, very clearly in words as well as in number. And payee name also. When you are going to pay also, the due date also clearly should be mentioned. The instrument should be delivered. Mere drawing of the instrument does not create a liability. Just only writing the instrument will not create. It has to be properly signed and stamped and authorized by both the parties. Then only it will create a liability. Otherwise, no. Done. Next. Recent question. Unpaid seller. So for unpaid seller, how many rights will be there? Two types of rights. Who is called as an unpaid seller? When someone be called as an unpaid seller, then you have, or else when amount not received, when amount not received on transaction, then it is called as an, we sold the goods but we have not received the amount, is called as an unpaid seller. So the seller is called as unpaid. Unpaid seller is having right against the goods and right against the buyer also personally. So for a buyer, what he will do? He can go for the court of law. He can file case against them to pay the price. Number one. Number two, suit for the damages for not acceptance. So we sent a delivery. So he is not accepting. Not accepting. Why you are not accepting? Further also you can go to the court of law. Right? And suit for the special damages. If any special damages incurred to the seller due to the action of the buyer on the goods now, for that also you can liable for the interest and damage also. On buyer. Then the right available against the goods. When the property in goods has been transferred, already goods property has been transferred to the buyer. What buyer more can do? When the property in goods has been transferred, he can have a right on lien. So he should not let the buyer to use. Should be taking control of that particular goods. And if they are there in transit, we already out from our godown, seller godown, and going to the buyer. So we can stop that. We can ask our delivery boy to come back. Don't deliver them. And we can resell to some other person also. We can resell to some other person because he is not taking, we can sell to someone to gain the same income. This is when the property goods are not being transferred, when it is not transferred, then in such case, he can withhold the delivery. He transferred means he left, the goods left his godown. Right? When it is not left, he can withhold the delivery. He will not be delivering those goods. That's it. Done with it. Another two marks in law. Done. Now let's go back to the tax. One more. Tax provision. Every time 2 marks in your pocket, sir. 2 pocket. Right? Tax planning, tax avoidance, tax evasion, tax management. First of all, tax planning. What is tax planning? They can ask in math the following, they can ask directly, they can ask the example form, in any way they can ask, but one question for sure, 2 marks. Tax planning is nothing but it's a plan to reduce the tax with a legal planning. Legally you are claiming the exemption, legally you are claiming the deduction, legally you are following the rules and taking a benefit of everything. That is a way to reduce the tax by taking full advantages provided in the act. I paid an insurance premium. I have a right to claim under the deduction 80C when I paid an insurance premium. So that is available legally. And legally, I am a resident individual having a income less than 7 lakhs. Less than 7 lakhs. I can take a rebate legally 87A applicable. So those are properly as per the futuristic approach. It is more of this practice is to follow within the law moral framework. We will not break the law, we will not violate the law. Within the legal framework only we will take it. So that is to reduce the tax liability by applying the script of the law. More futuristic and positive in nature. This is very positive and permissible one. Whereas tax evasion, avoidance. Avoidance. We are not evading, we are avoiding it. Try to avoid as much as possible. Try to avoid the negative people as much as possible. Like that. So avoid means we are bending the law. We are identifying the loopholes which are there in the law. How can we take extra benefit? How can we avoid the tax to some extent? How can we reduce the liability of a tax? So by that thought process now you'll always search for some wrong things. That is loopholes. By taking a full advantage of the loopholes which you identify in the law. Means you will interpret according to your own interpretation, which is not the interpretation of the Department of Income Tax, but you will interpret in some other extreme way where no one can argue upon. So that is called as an avoidance. Bending the law without breaking the law. You are just bending it. You are not fully breaking it. You are not fully violating the law. You are just using the small minus points there in the law. To reduce the tax liability to minimum, we will use the script of the law in other way. And this is also futuristic, but very short term in nature. Futuristic only, but very short term. We cannot go in a long term for this. On a long term basis, this will not work. Loopholes will be corrected by amendments now. So on long term, it will not work. Every loophole, once it go identify now, it will be curbed by the department. They'll issue one circular generally. Right? That is tax avoidance. Whereas tax evasion means fully illegal. And illegal way to reduce the tax liability, deliberately decreasing the income, voluntarily increasing the expenditure so that profit will come down. You are trying to reduce the income, increasing the expenditure. Those type of transaction you are trying to create it. Illegal way you are trying to reduce the income and suppressing the income, increasing the expenditure so that total income will come down, total profit will come down, tax also will come down. It's illegal and you are breaking the law, violating the law, you will be liable for the penal actions by the Department of Income Tax. Right? So unfair means unfair advantages totally. This is actually concerned with the past. This is concerned with the past and applied after the liability of tax has been arise. So after calculating tax liability, how to reduce, you are trying to think about it. Past actions oriented. So totally a negative approach and not futuristic, very short term and penalized. Action will be taken upon you and every legal action will be initiated against you and even they can go to a court of law and tribunals also. What is tax management? It is generally procedure to comply with the provisions of the law. The process to follow the income tax law is called as a tax management. It is implementation or execution part of the taxation department of organization. It is implementation. Whatever the tax department there in every company, our taxation department of India will be initiating the process of collecting the tax and all. That's a tax management related. Comply with the rules and regulation. Like if any rectifications are there in your returns of income, so that returns of income rectifications are making a proper loss returns and defective returns identification, dealing with income tax department, all those are tax management. Right? Done, sir. Another concept completed. Next concept. Minor income. What is minor income? All are following now? Or are you getting bored? It is 1.5 hours almost. 5 minutes to go. No boring now? Should not get bored because now only target is to get the JRF. Only 5 days to go.
So beautiful, so elegant, just
like
looking
wow now.
like a wow.
Tax planning, tax management, no difference. So there is a difference.
Just looking like a wow.
The difference is that planning is about to take the legal deductions to reduce your tax liability. In management of the tax, no reductions, nothing. Following the rules. Due date appeared. I need to file the tax return. Every year I need to file the tax return on or before the July, on or before the September, on or before the November 30. So I need to file the return. The return filing will be in a prescribed manner as given by the income tax department. The ITR forms you need to choose. This is all what? Following the process. That is management. But planning is to reduce the tax liability by following the legal rules. Chalo. in June 2023 as well as October, not December, October. This question is clubbing provisions related to the minor childs. I'm thinking to keep 2 sessions tomorrow and day after tomorrow also. Because from 4th, no sessions will be there. And tomorrow morning 10 a.m. to 12 or 1 o'clock, 12 o'clock most probably. And again evening 6 p.m. Day after tomorrow also morning 10 a.m. and evening 5 p.m. itself will start. Fine. All commerce only, no paper one, all commerce. Marathon 1, 2, 3, 4. Today 1. Total 5 marathons. And you make your schedule accordingly. So that we can cover more concepts, sir. That is the agenda. Like this, if you cover the concept now, you will remember me for sure in the exam hall. Not remember me, but the concept to get 2 marks for each question. The damn sure topics. Right? So clubbing provisions related to a minor child. Minor child, generally minor will be a chuddy fellow. When he is getting an income now, he cannot file income tax return to pay the tax, right? So his income will be clubbed in the hands of the parents. But how it will be? All income accruing to a minor child shall be clubbed in the hands of the parent. But which parent? Is it a mother or a father? Whose income is higher? We will be clubbing. Total income excluding the minor income, whichever is greater. If the father income is greater, we will club that income to father only. The mother income is greater, we will club the income to mother only. Right? But there are 2 exceptional cases. When minor, where the marriage of a parent does not subsist. Income of a minor shall be clubbed in the parent who maintains the minor child. Suppose the parents are living apart. Then where the child is living, whether the child is living with a mother income, it will be clubbed. If it is with a father, with the father income, it will be clubbed. If once a income is included in the hands of the father, mother shall be continued to be clubbed in the same. Sorry. If once it is included in the income of the father or the mother, it will be continuously continued only. You cannot change it later. Only assessing officer permission. Only assessing officer permission will be required. On his permission only you can able to change it. But if no clubbing will be applicable, no clubbing will be applicable, sir, on one condition. No clubbing will be done if minor is earned by his own special skill. Suppose Sarigamapa, Indian Idol, Little Champs, he went to a singing competition by his own special skill, he earned the income. Will his income be clubbed in the hands of the parents? No, sir. Individually, it will be taxable in the hands of the minor only. First situation. Second situation, no clubbing will be done. Minor child is suffering from any type of disability. Right? If any type of disability is there, that type of disability and he is earning income, then that is also will not be clubbed. But the questioning area is this one. Recent exam, how much exemption limit for minor clubbing? So the clubbing is applicable only when the minor income exceeds 1500 per child. Up to 1500 per child and no clubbing applicable and nothing. More than 1500 per child exemption to that parents whose hands income is clubbed. 1500 per month only it is exempted. Over and above minor income is there now, that will be going for the clubbing in the hands of the parents. And no clubbing from the date of minor child attains the majority. When he become major, obviously no clubbing. The income earned by the minor child shall be taxable in the hands only. The income earned by the minor child shall be taxable in the hands only, and it will be return of income shall be in their name and signed by the guardian. Generally, guardian will be KBC. Guardian will be taking care of it. Done related to money. Now let's go to some economics. law, legal, tax and law, tax and law. Now let's somehow change this to economic. In process costing, accounting, will go to the accounting. June 2023 question, the steps in process costing they asked. Steps in process costing. So what are the steps? Generally, process costing is applicable to which type of organization, sir? Which type of organization process costing will be applicable? Heavy production, oil refinery. Okay, more. Comment it, by comment it. Manufacturing. So generally, when a product like oil refinery or any product that takes more than one step process, like suppose oil refinery means you need to introduce the peanuts, and first we need to buy the peanuts, later grown them properly, roast it, and then only introduce in the process. That will go into the machine. It will give you some raw oil, and that will be again refined process. It has to go to the next. So work in progress, process 1, process 2, process 3, like that. Every process is having their own finished good. So one process finished good will become a next process input raw material. Like that till you get a final finished goods, it will be you will be incurring a cost continuously at a various stages. So for that we have a 5 steps in calculation for accounting purpose. First, summarize the flow of physical units output. How many final finished goods that you produce? First, identify them. All the process together. Compute the output in terms of equivalent units. Equivalent units means based on the percentage completion. Based on percentage completion. So that is in process 1, 10 percentage goods process. Out of the total finished good, 10 percentage completed. In process 2, 50 percentage process done. In process number 3, 100 percentage process done. So this 10 percentage quantity will be calculated. This 50 percentage quantity, this 100 percentage quantity put together will become an equivalent units. Means from each process based on their percentage of completion, equivalent units will be counted. Equivalent units will be counted. Right. Third stage is that this total whatever the equivalent units and cost incurred. Total cost divided by the equivalent units calculated in the second steps. That will give you per unit equivalent cost. For 1 unit equivalent cost you will get. That per unit equivalent cost, compute the equivalent unit cost, summarize the total cost to account for. How much total cost is there? You need to summarize. After that, equivalent unit cost also. Actually, this has to come before, no? And whatever the unit cost, per unit cost that you will get now, which is total cost divided by equivalent units. Finally, that per unit cost will be allocated to the finished goods. That cost will be treated as a cost of production, per unit cost. Right? So these steps are ulta in the PDF. Now, time one question guarantee. Difficult way they are asking, not in direct way. So much indirect way they are asking. So this is covered in economics. This will be covered in economics unit number 3 of the UGC NET Commerce. This we have 4 types of market. I'll explain from the context of the examination rather than hitting around the known points. Ascending, descending orders. Not only that, the curve representation to at a respective market. Curve representation, monopoly slope downwards. MC is half of the MR. Like that, the curves meaning they're asking, and they're asking in a step form, sequence order they're asking. We know that perfect competition market is a market in which large number of sellers will be there of small firms, and selling a same identical product, no barriers to entry, no barriers to exit, and industry will decide the price. Here firm is only price taker. These are regular features. Regular features of monopolistic. Here large number of small firms. Here also large number of small firms. Sellers are large in both. But here homogeneous product, here differentiated product. Somehow barriers are going to be there in this, but barriers are no barriers in the perfect competition. Here firm will be the price maker. He will decide the price for differentiated product. Every product will have their own price. That is why he will be the price maker. Hairdressers, taxi companies will be a monopolistic example. Here theoretical extreme. So only theoretically perfect competition possible. So fruit seller, foreign exchange markets are perfect competitive market if we can assume. Right. Demand and market forces will determine the price or the industry. Firm is only a price taker. And in oligopoly, small, very few firms will be there, but very large. Few but very large. Big companies will be there. Products are different in nature. Differentiation is going to be at a high level. And very high barriers will be there to enter into this market and exit also. Firms are price takers. Firms are price takers. So price makers. Only perfect competition price taker. Meaning all makers only. And here phone manufacturer and supermarkets are the example. Whereas monopoly, only one single seller, unique product, generally railway, unique product, and very high barriers will be there to enter into this market. Actually, you cannot enter, no entry. Individual firm sets the price. The firm will be deciding the price here. Now I will ask you to arrange one question. Just only, this is known concept only, but I'll ask one question to you. I want, based on the barriers to entry and exit, arrange from ascending order. Descending order. High barriers to low barriers. Please arrange. Arrange the markets from high barriers to low barrier, which is descending order, high to low. Ascending order wise, high barrier is in which barrier? High barrier. So barriers descending order. Monopoly market number 1 and perfect competition will be last. Correct na? High barrier and no barrier. You can arrange the ascending order of the based on the price decision. Price maker or the not up. Who is the price maker to? Actually, that is not possible because only in perfect competition taker, not maker. From the number of sellers, you can arrange them order. Monopoly, later oligopoly, later monopolistic, later perfect competition market. High barrier will be descending. High monopoly, high and too low. Perfect competition. Now number of sellers wise. This is a previous year question area by. That is why I am asking you to arrange. Number of sellers, high sellers, large number of sellers in perfect competition. High. And second, only one seller will be there low. Who will be? Monopoly. And third will be oligopoly. Few sellers will be there. And somehow large number of sellers in monopolistic. Right? This is the arrangement. High to low and low to high. Right? Now, which is unknown? These are all known to you. Now I am going to tell you some unknown area. Look at the below table. This is previously October 2022 question. Number of sellers wise, very large, small, and 1. Product differentiation wise, no differentiation, slight differentiation, substantial differentiation, extreme differentiation in monopoly. You can arrange in a product differentiation wise. Product differentiation wise is product differentiation. Extreme differentiation, high differentiation will be in monopoly. Same. Second differentiation will be oligopoly. And some more differentiation in monopolistic. And no differentiation in perfect competition. Homogeneous. These both are same. Barriers and product differentiation same. Now, when it comes to price elasticity is a questioning area where we confuse a lot. We confuse a lot in price elasticity. Price elasticity in perfect competition it is infinite. In monopolistic it is more than one large. In oligopoly it is less than one. And in monopoly it is small, very small, very small. Even it can be monopoly, can be zero also. Can be zero also, very negligible. So elasticity wise high to low. Elasticity wise high to low. Price elasticity wise. Price elasticity. Number one. High price elasticity in perfect competition. After that perfect competition, and the highest low is going to be monopoly, and after that monopolistic. Third one, is that clear? This is product differentiation. Whereas degree of control over the price, this is also previous year question. How much you are able to control the price? You can't control perfect competition. Monopoly, highest control. Monopoly, oligopoly, monopolistic, and perfect competition. High to low. High to low. All right. Next. Price ceiling, price flooring. What is price ceiling, price flooring? Price ceiling, price flooring. Price flooring, price ceiling. Chalo, first one, there is a question in June exam. 2 shifts, 1 question only. So 2 shifts, shift 1 first question, shift 2 first question is this only. Price ceiling, but not direct one, indirect only always. Price ceiling means flooring means. Floor is lower one. Ceiling is upper one. This is ceiling, this is flooring, right? So ceiling means MRP. More than that price, you cannot go. Flooring means below than this price, you cannot go. I cannot go below than this now. I have to go by steps only. Right? I cannot go up because this is the last point. So maximum price set by the government, which is MRP, minimum price is nothing but price flooring. So you are protecting a consumer from high price is the main intention of ceiling. That is the maximum price. So nobody can sell above the price. And you are supporting the producers to fair earnings. So nobody should sell below this price. That is to support the producers, support the consumers. Effect on price. Here effect on price will be it keeps the price below the equilibrium always. So that everybody can afford to buy it. Here price flooring keeps the price above the equilibrium. The question which was asked is in 2023 June, when the price set below the equilibrium, when the price ceiling set as a below the equilibrium, price ceiling set as a below the equilibrium, then what will be the consequences or effects of that? That's the question. What will be the consequence or effects of that? So consequences is that when you are setting the ceiling below the equilibrium price now, it will create a shortage in the market. It will create a black marketing. So there is a possibility that potential outcome is shortage can happen due to excessive demand. It can lead to black market because your ceiling cannot be below the equilibrium. Actually, ceiling effect on that keeping the price below the equilibrium. But effect is that it is leading into black market and it is leading into excess demand. Excess demand, to okay, no problem. Whenever high demand is there in the market, we can't able to supply according to the demand. Demand is more than the supply. But it is leading into black market also. It can lead to black market. And here examples are rent control, maximum rent that you can collect in that area, or maximum gas prices that you can collect from the consumers. Those are all the price ceiling examples. Right? Price flooring is that, and here it keeps above equilibrium. Surplus here, and the potential outcome is that surplus stock will be there to excess supply. So we can easily meet the demand. Full supply will be there whenever as per the below the or above the equilibrium price. It may lead to wasted resource also. Our resources will get wasted by going with the price flooring because we can't produce it. This is the minimum price that we are selling at. So it can lead to wasting of the resources. Minimum wages, minimum agriculture product will have a minimum price also in the market. So that will be a best example of this price flooring and ceiling. Right? Next one, sir. Next, price discrimination degrees. There are 3 degrees of price discrimination in economics. First of all, what is discrimination of the price? Price discrimination means charging a different prices to a different customer groups or individual customer different. So when you can discriminate the price, there are 4 conditions for discriminating the prices. Before going for the types of price discrimination, there are 4 conditions for price discrimination. What is that? There are 4 conditions. This is also previous year question. 4 conditions for discriminating the price. Four conditions for price discrimination. Number one. Number one. Price discrimination. Number one. 4 conditions are there for price discrimination. Number one. What is that? Market power. Market monopoly power. You should hold up market power in your hand. You should be a monopoly. Then only you can discriminate. And there should be separate markets. Separate market means market segmentation should be done. You can able to differentiate the market. You can able to segment the market. Then only you can differentiate the prices, discriminate the price. Third one, no resale of product. Once your product is purchased, that should be consumed by you only. You should not resell to other person. If you are reselling to other person, you are losing the power. You are losing the power in the market, right? Should not have a resale. And what will be the elasticity of price? Was it stuck? It stuck na? Now it is regained. Okay. Price the condition for the elasticity. Must be elastic or must be inelastic? Last fourth condition. You have to tell fast, everybody. Price should be inelastic. Elasticity should be price inelastic. If these four conditions are satisfied, then you can discriminate the market with respect to price. Now, all the four conditions are satisfied. Now, you can do the discrimination of the prices. The discrimination can be in three ways. Three ways. First degree, second degree, third degree. 3 degrees of price discrimination will be there. First degree of price discrimination. Charging a different prices for each individual unit. Here, each unit different price. Each unit different price. Each unit you are charging different price here. Every individual unit that you purchase, not different price you need to pay. So people pay their own individual willingness. If you are interested, you will come and buy. If you are interested in tourism places now, by looking at the people, they will sell at a different prices. So individual unit, individual price. Individual price. Second degree of discrimination is that varying with the quantity sold, that is, if you buy more quantity, less price. If you buy less quantity, more price. So based on the quantity sold, the price will be getting varied. Or else, at the time of purchase, the time, at what time you are purchasing. So the time of purchase also. If you are selling, if you are purchasing the, what we can say, Sitafal in this season, it will be very high price. After the season, somehow price will be low. So during the season, price will be very high. You can discriminate the prices, right? And same banana on Kartika Purnami day, it was more, almost 70 rupees or 80 rupees per dozen. Now it is on normal day 40 rupees only. So based on the peak time, that the price will be different. That is based on the time of purchase or quantity sold, it will be differing. Now third degree of discrimination is charging a different prices to different group of market, means segments. Who are doing a market segmentation. For one group of people, you are selling one price. For other group of people, you are selling another price. Segmented by price elasticity of demand, based on their income, based on their age, based on their sex, male, female, different prices will be charged to a different group of consumers by grouping them. Right? Responsiveness should be less, means that is what inelasticity, sir. So first degree, second degree, third degree. First degree, for a one unit, the price will differ. Each unit, the price will differ. Bulk quantity plus time of purchase will be second degree. Third degree, proper segmentation, charging different prices to different group of consumers. Done, sir? Right? Hello. Next concept. Try to take one small concept and end this session. Here, you can look at one more concept, that is three types of exposures will be there in the market. So whenever foreign exchange rate calculation comes now, there are three types of exposure due to impact of foreign exchange rate. The three types of exposure, number one, moment time when exchange rate changes. When exchange rate changes, three types of translations are three type of exposures. Translation, look at the term. Operating exposure, transaction exposure. This operating exposure is also called as an economic exposure. Economic exposure, sir. Right? First, translation exposure means changes reporting owner's equity in consolidated financial statements. See, holding company will be there, subsidiary company will be there. So, two different companies. Here, you are merging this and preparing a consolidated balance sheet, consolidated profit and loss account you are preparing. And this holding company is an Indian company, this is a foreign company. This is in rupees, this is in dollars. When you combine, prepare the balance sheet, then obviously, how can you merge Either you change the rupees into dollar or dollar into rupee. You have to do one thing, right? Any one currency only you can mention the financial statement. So while translating rupee to dollar, dollar to rupee, while preparing a financial statement, whatever the differences comes, that is translation exposure. So it is caused by changes in the exchange rate at the time of preparing financial statement, at the time of a transaction occur. So both are different dates it is going to be there. So when you are translating, different prices will be there at that time. But actually transaction occurred at some other time, previously in the past. At that time the rate is different, now the rate is different. The difference comes is the translation exposure. Operating or economic exposure is nothing but whatever the changes in expected future cash flow arising from unexpected exchange rate. So future cash flows are going to change due to the unexpected exchange rate changes. We are not expecting that exchange rate is to change, but suddenly it changed due to economic conditions. So due to the economic fall down or whatever the boom, it is increased or decreased. Either rate is increased, rate is decreased, whatever happened. So that change is going to happen. Whatever the future change that we are expecting is called as an operating exposure. All right, sir. Next, the transaction exposure is impact of settling outstanding obligation entered into before change in exposure, before change in exchange rate, but to be settled after change in exchange rate. So transaction. Actually, we entered into certain transaction before. At that rate, when we entered into transaction on 1/1/2023, the price was 70 rupees per $1. Now, when we are executing this time, we entered into this. At that time, no payment was done, but the price was that much. So now we are executing that in 30 November 2023. After 11 months, we are executing this transaction. Now it is 81 rupees per dollar. For $1, 81 rupees. What the change is? 11 rupees change is there. So impact settling the transaction. Previously, at that time when we entered a contract, it is different. Now when we are executing a contract, it is fully different. The difference that arises due to transaction executing. That's called as an transaction exposure. Right? Understood, sir? Clearly. That's about this session. I hope you liked it. So this is how the revision has to happen. I'm targeting based on the previous year questioning areas. So this marathon number 1 is about. If you like it, do let me know in the comment section and do comment it and share with your friends, and do not forget to join in our Telegram group. And you can also purchase our paper 1 revision course, 399 only it is available. 35 shifts topic wise previous year questions of paper 1 with explanation available. Quick revision with a single liner PDF. And as per as per paper 1, same NTA interface CBT mode of test series. Total 11 mock tests are available in this. You can purchase just at a 399 and you can use it for your set exams also for a future purpose. Right? Sir, one more, then complete 20 concepts. 20 concepts, huh? If you take one more concept. Operating exposure is nothing but the changes which are happening in the exchange rate due to economic fall down or economic boom. So economic fall down or economic boom, it is increasing or decreasing the exchange rate. That is what operating or economic exposure. And also CBT test series is available for UGC NET Commerce at just 99 rupees only. Full length mock test is available. 100 questions each. After every question, after every test with explanation, it is there. Right? You can take benefit of this 99 rupees. Only 5 marks are available, not many. Then on you just see and identify. Right? Thank you so much. Bye. Have a great day. And we will have a next marathon tomorrow morning 10 o'clock, and later tomorrow evening also 6 p.m. again third marathon is going to be more interesting concept which will fetch more marks in your examination. You are going to consider it. So please do hit a like button and share with your friends. Finally, one thing.
So beautiful, so elegant. Just